if the United States was going to TWAP into 1 million Bitcoin over 5 years, that other central banks around the world, both major and minor, would sit there and do nothing. That makes no sense to me. The game theory, that just makes no sense to me. What would make sense to me is that they would front run that, and then everybody else would front run that. And part of what makes it difficult for me to reason on the BSR, a couple things. One is that it's so wildly bullish that you feel silly kind of even talking about it.
Scale is the blockchain that's truly built different. Forget gas fees and waiting. Scale offers a seamless Web3 experience with fast, fee-free transactions. Whether it's gaming, AI, or next-gen dApps, Scale is here to power your future. Explore more at skale.space/ecosystem and follow them on X at Scale Network. Global Stake is redefining staking with performance, security, and sustainability at its core. Global Stake's self-owned, end-to-end bare metal infrastructure gives you unparalleled performance and risk management. Plus, with SOC 2 Type 2 and CCSS certifications, you get institutional-grade protection you can count on. And it doesn't stop there. Global Stake is carbon negative, meaning the more you stake, the better it is for the planet. With global reach, competitive pricing, and slashing insurance backed by the highest rated carriers, it's time to upgrade your staking game. Join the future of staking with Global Stake, your trusted partner in institutional staking. Visit globalstake.io to experience its white glove service, superior economics, and best-in-class security. Meet Kraken Institutional. Whether you're an asset allocator, a trading firm, or high net worth individual, Kraken Institutional unlocks the powerful tools you and your organization need to trade and manage crypto at scale. Reliable, easy to integrate, with white glove service and 24/7 support. Visit kraken.com/institutions and get in touch today. This is not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payword Interactive Inc. View legal disclosures at kraken.com/legal/disclosures. Hey everyone, got a special treat for you. This is a special crossover episode for both On the Margin and Forward Guidance, and I really hope that you enjoy it. All the best and have a happy holidays. Welcome back to another episode of On the Margin, and joining me today is Travis Kling, CIO of Ikigai Fund. Travis, really great to get you on the show. Been wanting to get you on here for a while and catch up, so it's great to have you.
Pleasure to be here. Beautiful day to be a crypto investor, baby. Beautiful, beautiful day.
It's been a beautiful month, to say the least. Yeah, good times are happening. Sweet. Well, for those that don't know, you haven't heard you talk before, but you obviously, you have this experience of coming from, the TradFi world. You were a PM at Point72. So you have a lot of this macro backdrop that, provides a context to how you view crypto and Bitcoin in that space. So I want to just start by just getting your high level take on what are you seeing in terms of, the global, monetary cycle that we're in right now, the global, business cycle, and how that contextualizes your view on risk assets right now.
Yeah, I mean, directionally, it seems like nearly every major central bank is well on its way in an easing cycle, and directionally liquidity up. And that certainly, I think, does matter for crypto. And it's funny that we have now, for 2 consecutive halving cycles for Bitcoin, had the halving kind of obscured by monetary and fiscal policy easing. And once again, this year, sort of, in 2020, it was like, okay, we did 3 trillion of QE in 6 weeks. And then the Bitcoin halving happened. And then Paul Tudor Jones wrote a letter calling Bitcoin the fastest horse. And then MicroStrategy started buying Bitcoin. And that's how you went from, $7,000 Bitcoin to $70,000 Bitcoin. And this time around, not quite as extreme with QE, but we got spot Bitcoin ETFs for the first time right before the halving. You've had Saylor obviously hammering Bitcoin through MicroStrategy. And then also the Fed started rate cuts, and nearly every other central bank as well, starting rate cuts as well too. And not QE yet, but lessening the pace of QT, which I think is going to be, I assume they're going to put a pause on QT here pretty soon. So directionally, it looks good. I think for me, it feels like the main risk on the horizon is it is easy to imagine how a Trump administration and some of the things that are top of the list for what they are trying to accomplish as being inflationary on the margin, um, causing an inflation impulse. That's not entirely true, because I think Doge is Department of Government Efficiency. I think is deflationary. But if you get tariffs, you've probably seen there's been big increases in the business confidence surveys. You probably pay attention to that, and the listeners here probably do too. It's probably quite clear that from an economic business perspective, people are sort of fired up about increased growth in general, maybe tax cuts, this sort of thing. So it seems like to me the main risk would be if the you get a Trump, maybe you get 100 days into a Trump administration, you get a bunch of executive orders, edicts, movements on these various things that he's focused on, and you start to see inflation pick up, labor data pick up, Powell has to go on pause, and then maybe start talking about a hike instead of a cut, and that kind of freaks the market out a little bit. But to me, I feel like that would probably be somewhat. It's easy to imagine the market hiccuping on that for some kind of multi-week, maybe a few month period of time. But it's like if the Fed has to go on pause because GDP is growing at 3% nominal and or real, and inflation's growing at 3.5%, like that seems like the kind of thing that relatively quickly I think the market would be able to look through, that basically everything is so healthy and going so well. Um, but I feel like that kind of whole setup to me does feel like what the kind of broad brushstroke macro backdrop is going to be for 2025.
I'm curious your take. You've been kind of opining a little bit on the just the economic, I don't know, maybe not vibe shift, but just this like philosophical shift that feels like it's sort of occurring right now in just how the economy, where if you think about, the days from basically 2008 till 2020, where we had, secularly low GDP growth that sort of had to be like propped up by, weird, acronyms from the Fed like QE, et cetera. Now we're in this regime where it feels like, we got robust growth, like you just said, like GDP is strong. We have this huge wave of deregulation that's about to come online here. We have a president that's really positive on increasing oil supply and getting energy prices down. I'm curious, like, how do you think about that shift in just like like you said, the optimism index is just skyrocketing right now. Like, how do you think about just this philosophical shift that feels like it's occurring in just, the business world at large?
Well, I know everybody doesn't feel this way, but for me, Trump represents hope. A Trump administration represents hope. When I look at the team that he's put underneath him, the team I'm more excited about than him himself, honestly. I'm not like, I was certainly really glad that Trump won, but I'm not like a huge like Trump supporter. I think it's incredibly obvious he was the better pick, but I'm most excited about the team that he's put around him. Vivek and Vance, Elon. It's like insane to have, it's looking like this is going to be like the most consequential figure for at least the last 50 years, if not longer. You just think about all of the things that he's doing, the impact that he's having. Tulsi Gabbard. I think Scott Bessent was a good pick. Paul Atkins, SEC, just a lot to be happy about. Cash at the intelligence director. There's just a lot of these names that I'm fired up about, because in my view, it looked like there's just a lot of rot in our government in general, in the institution of the U.S. government. There's been a lot of rot, and it's certainly too early to say right now. But there is my hope and my belief, and I'm optimistic that this is going to mark a turning point, and that you could fast forward 4, 8, 12 years and then look back at this period right now as a major return to normalcy, health, prosperity for America, just kind of getting back on the right track. And I just think that those are the types of things that matter for economic strength as well too. There's other reasons, right? The tightening that we have done over the last 2 years was not kind of as much tightening as maybe it looked like on its face. And it was on the back of such an unimaginably large amount of liquidity that was created in response to COVID that I think there's still just a ton. You look at things like the RRP, a lot of people point at this sort of deal. And I know Lynn Alden, one of the main macro folks, pounding the drum on that when you have this much kind of fiscal, sort of when you have this much deficit to GDP, this much government spending and debt to GDP, that high interest rates are actually sort of more stimulative at these levels as opposed to having a tightening effect. And it certainly seemed like some version of that played out to end up being true. Because just on its headline, if you had told me, at some point in 2021 that the Fed is going to increase rates the most rapidly that they've done in 40 years, and they're, you're basically just going to scream to, 5.5% Fed funds. Like, what is the economy going to do? What are capital markets going to do? I would have said the economy is going to crash, capital markets are going to crash. And I would have said there's no chance that they can do that because I don't think either one of those things can take that. And as it turns out, that wasn't true at all. And we just continued to have pretty decent growth throughout all of it. So I think that points to the validity of that view and just some of the backwardness that we have here. And so now, I don't know if that means that we're operating in this backwards land now where like Fed cuts are actually like somewhat restrictive. I don't know if Lynn has that view. I haven't heard her say that recently, but yeah, I think it just seems like things are in a pretty good spot with macro.
Earlier in there, you mentioned this idea of a turning point. I want to bring in this idea that, a few months ago you went pretty viral because you're writing these articles about financial nihilism and just what was occurring and, leading into some of the trends that were occurring, especially in the crypto space around just like this approach and focus on like meme coins and things that didn't really mean much. And it's just sort of like nothing really matters. Just, try to gamble your way out of out of debt, out of lower middle class, that sort of idea. Are you still a believer of this idea of financial nihilism, or, has it topped and now you're long optimism? What do you think?
It's too early for me to have conviction on a call like that. But I think simplistically, the opposite of nihilism is hope. And if people start to feel like they have hope in building a sustainable future for themselves where they previously had less or no hope, that can change things. Doesn't strike me as the kind of thing that's going to change overnight. That strikes me as a sort of multi-year type of deal. And I know that there's a lot of consumers that, you're in debt. There's a lot of school debt. There's nothing that's going on in the Trump administration or will go on to me that feels like an immediate sort of snap your fingers and like all of the causes of financial nihilism go away overnight. But I could imagine, that sort of thing is a big boat. Kind of takes a long time to turn a big boat like that. But I could certainly imagine this being the beginning of turning that big boat in a major way. And maybe you can fast forward a few years, half a decade, something like that. And maybe plus or minus 12 months for where we are right now is the all-time high in like nominal parlay sports bets that are made. Maybe that's true. And And that would certainly be a good thing for the world, because I think that that is, to me, kind of meme coin gambling. The closest comp is basically sports parlays, multi-leg sports parlays, which continue to just explode in popularity. I wrote that article. Let's see here. A lack of pretense that any of this shit does anything or will ever do anything. That came out February 1st. And then Financial Nihilism, the Zeitgeist of Young America, came out March 1st. So we're coming up on a year on those two. And things, Trump, I think Trump really does change the setup there. But it just remains to be seen. I've been so, you can probably tell by the way I'm talking, I've been so optimistic about what could happen here with this Trump administration and the team he has around him, the mandates he has, the sense of urgency that there appears to be. There's sort of, a very slim red wave. So, TBD on exactly maybe how much can get done through legislation. If you have just a little bit of crossing of party lines kind of thing, you can see some stuff being blocked. But I think is being a market participant for a long time, you have to develop this tendency to kind of bring down your lows and bring down your highs and bring up your lows to kind of keep things even keeled. That's a tool that serves you well in markets. And I feel myself wanting to do that with the excitement that I have around Trump, but I know a lot of other people feel the same way. So
I was going to ask, I wonder if right now, we're in this Goldilocks period where it's like, okay, nothing has actually started yet. We're just in this honeymoon period where it's like the inauguration doesn't happen. So it's like endless possibility. Anything is possible. And then is there a chance that, we're front running the hope a little too much?
Right.
Maybe meet somewhere more in the middle. That's a bit more reasonable. I don't know. Are you thinking like that, or it's just play it as it comes?
Yeah, definitely. Yeah, definitely. But I think it's really the team around it.
Yeah, I agree.
That gives me, and the fact that I love that they're putting a shot clock on Doge, right? This thing's supposed to be done by July 4th, 2026. And the two guys that are in charge of it, it's not an exaggeration to say, you might have the two best people on planet Earth. I don't know if there's two other people, Elon and Vivek. I don't know if there's two other people you'd rather have in charge of this kind of thing. And that's the kind of thing that can set the United States up for. The crazy thing about it is it's actually, if Doge is implemented at significant scale, it actually, you could think of it as being bearish Bitcoin.
Because it lowers the deficit.
Yeah, I have rattled it. Bitcoin is a non-sovereign, hard cap supply, global, immutable, decentralized digital store of value. I've said it 500 times at this point. It's an insurance policy against monetary and fiscal policy irresponsibility from central banks and governments globally. I also said that 500 times. Another thing I say a lot is Bitcoin loves QE and detests QT. I've said that a bunch of times as well, too. I think that's also a really good framework. It's historically, you have needed increasingly more egregious monetary and fiscal policy to act as a forcing function for pools of capital to consider this alternative store of value that is Bitcoin. And to your point, it's real easy to have some signposts out there for how this is going for the United States. Deficit to GDP, debt to GDP are two of the biggest ones people look at. Everybody knows what those charts look like and how out of control they've gotten. Some really scary stuff. And it's if we're now in some sort of multi-year walking that back and getting that more into a sustained level, which Scott Bessent. His three main things, he's got the 3-point plan, right? It's 3% GDP growth, 3% deficit to GDP, 3 million barrels a day of additional oil production domestically. And it's you get all three of those done. And does that just, that's obviously not QT, but it does make you feel better about the long-term viability of the US dollar and the stability of, over a multi-decade period of time, the stability of dollars and treasuries, obviously. Treasuries as a financial instrument is just as important as the U.S. dollar as a currency. So I think that's interesting. Now, there's obviously other very bullish things going on for Bitcoin as well too, but it's just something that I've thought about.
I've never asked this, but do you ever feel like it creates like misaligned incentives for Bitcoin owners to cheer on recklessness, even though they probably own it because they believe that we need responsibility? But then it's like, oh, yay, QE, more cowbell. Awesome. Even though it's like goes against their philosophical views.
Yeah. It's really
it's a weird
hard.
one. Hey, I quarrel with it myself too. Like
any savvy asset owner, anybody that's savvy that also owns assets, financially savvy that also owns assets, QE is just another. It's universal basic income for rich people, and you've seen this play out. And so, sort of selfishly, if you were financially savvy enough to sort of figure out what's going on here with monetary and fiscal policies and their effect on asset prices, to look through the lies of Fed chairmen and Treasury secretaries, both current and past, that pretend like this isn't what's going on. If you can look through those lies and see what's actually going on, you have benefited greatly if you're an asset owner, right? You've benefited, almost any asset. Doesn't matter if it's real estate. It doesn't matter if it's stocks. It doesn't matter if it's bonds. It doesn't matter if it's Rolexes or Ferraris or rare whiskeys or Jordans, or it's like any asset that has some kind of scarcity or whatever. It's just this is just been a steroid injection, but it's at the expense of people that don't own assets, and that has been a huge drop. That is a cornerstone aspect of financial nihilism. The rich have been getting richer, wealth disparity gap has been growing. People that can't hop on the asset ownership train are just getting chewed to death. Now you're looking at median home prices relative to median incomes. This is, for financial nihilism, I consider this the single most exemplary chart of what's going on here, is median home price to median income. And so if you can have empathy, if you're an empathetic person, you can look at that and you can say, well, for a huge swath of Americans, maybe it's working for me, but it's not working, and it's working less and less for a larger and larger swath of Americans. And that's not a good thing. That's not a sustainable thing. Historically, like going back hundreds of years, this is the sort of thing that causes a change in power. This is what literally causes revolts and revolutions. It's kind of hard to imagine something like that happening in like modern day America, like everybody just getting their guns and going overthrowing the government. But historically, it's like the single biggest thing that causes revolution.
Scale is shaking up the blockchain game. With a gas-free, invisible experience, it's the perfect solution for developers and users alike. Forget unpredictable fees. Scale's innovative model ensures smooth, cost-free transactions, saving users over $9 billion so far. With over 46 million active wallets, Scale is proving itself as the go-to blockchain for gaming, AI, and more. Explore the Scale ecosystem at skale.space/ecosystem and follow their journey on X at Scale Network. Global Stake is redefining staking with performance, security, and sustainability at its core. Global Stake's self-owned, end-to-end bare metal infrastructure gives you unparalleled performance and risk management. Plus, with SOC 2 Type 2 and CCSS certifications, you get institutional-grade protection you can count on. And it doesn't stop there. Global Stake is carbon negative, meaning the more you stake, the better it is for the planet. With global reach, competitive pricing, and slashing insurance backed by the highest-rated carriers, it's time to upgrade your staking game. Join the future of staking with Global Stake, your trusted partner in institutional staking. Visit globalstake.io to experience its white glove service, superior economics, and best-in-class security. Meet your secure, reliable institutional crypto partner, Kraken Institutional. Whether you're an asset allocator, a trading firm, or high net worth individual, Kraken Institutional unlocks the full suite of tools you and your organization need to trade and manage crypto at scale. But it's more than just powerful products. It's about enabling you to build and grow your crypto practice via deep liquidity, industry-leading security, and white glove service. Think 24/7 support from an award-winning account management team and expert guidance through your institutional crypto journey, from onboarding to product demos and more. Experience it for yourself. Visit kraken.com/institutions and get in touch today. This is not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payward Interactive Inc. View legal disclosures at kraken.com/legal/disclosures. You mentioned obviously there's a lot of positive aspects for the crypto landscape coming from this administration. One of them being the potential for a strategic Bitcoin reserve. As somebody that's like macro first and kind of got into crypto through that macro lens, which I think is quite similar to you, I've been trying to think about like what my opinion is on that. I was always like a big believer in that idea being very positive for emerging markets and emerging market central banks, but I'm quite surprised to see the US being one of the first, and I'm trying to think through like what does that mean for a reserve currency. So I'm curious about your take on how you're thinking about it.
It's huge. Anybody that is a Bitcoin owner or thinking about buying Bitcoin or thinking about buying more Bitcoin or thinking about where they might sell their Bitcoin, this is a huge aspect because any kind of price target that you're going to make on Bitcoin this cycle, your view on the BSR will very significantly impact whatever that price target would be, really significantly, in my view. To me, and this is not financial advice, I'm wrong often, without a Bitcoin strategic reserve, it's kind of feeling like 140 to 175-ish this cycle is kind of feels right to me. And maybe a midpoint in there feels like a fine base case to me. But then if you're talking about the Lummis bill getting passed and the United States government buying 200,000 Bitcoin a year for 5 years, which is what her bill states, your price target it's not in the 100,000s. It's not in the 200,000s. I don't think. That would be very rapidly moving to kind of 250-ish. And I feel like you're probably going higher than that. And I don't see how that would not spark a sovereign bidding war for Bitcoin, because it just doesn't make sense to me that if the United States was going to TWAP into 1 million Bitcoin over 5 years, that other central banks around the world, both major and minor, would sit there and do nothing. That makes no sense to me. The game theory, that just makes no sense to me. What would make sense to me is that they would front run that, and then everybody else would front run that. And part of what makes it difficult for me to reason on the BSR, a couple things. One is that it's so wildly bullish that you feel silly kind of even talking about it. Like it's like, oh, the United States government's could buy 1 million Bitcoin and put it on their in the treasury over 5 years. Like it just sounds kind of like it's like, who am I, Max Kaiser? Like it's like, what are we talking about here? But also part of it that I struggle with is the logistics of it, of actually getting it done. Because if you think about it, it's like, hey, we're trading 107 right now. Saylor's like his premium to NAV is wide open, so he's just hammering the shit out of Bitcoin right now. He bought about $12 billion fucking dollars of Bitcoin in November. He's up to he's done another, 5 month to date or something like that. He's gonna keep hammering it as long as the premium is open. And so it looks like we're heading high even without Bitcoin strategic reserve type of stuff going on. We're heading higher. But then it's like this thing, like imagine the Lummis bill gets out of committee. Okay, and now that's a headline announcement. Okay, this thing is now out of committee. Okay, price pops. Okay, now it goes to vote in Congress. Passes vote. Okay, now, how much does the price go up if it passes? Okay, now it goes into committee in the Senate. Okay, now it gets out of the Senate committee. Okay, now how much does price pop? Okay, and then it gets passed by, let's say they go to vote in the Senate, and then it passes the Senate. What price is Bitcoin trading at by the time we get to there, right? And the amount of front running that's going on, and just the logistics of how that works has been part of the reason I think that I've struggled with thinking that this is actually going to happen. But you're seeing these little hints. Cynthia Lummis had a tweet last week. She had a picture with Scott Bessent. I don't know if you saw that.
I
Them
did. Yeah.
shaking hands. And I can't remember the exact wording, but it was something along the lines of he's going to be a key ally in getting my bill passed. I took that as a significant incremental piece of information, because the way that I've been thinking about this is we're at point A right now. Let's say point B is the market pricing in a high likelihood of a Bitcoin strategic reserve being passed. And you think through what are the new pieces of information that need to come out to get from point A to point B. What needs to happen for the market to increase its assigned probability of a BSR happening? And to me, it was like, well, if you had Scott Bessent say something, that would probably do something. If you had Trump come out and say something publicly, that would do something. And you're seeing these little hints of these things. That Cynthia Lummis, I mean, that was like a little hint of something. You had who was it? You had Trump's campaign manager. What's that guy's name? He was on stage.
Howard Lutnick.
No, it wasn't Lutnick. This was last week as well too. What's that guy's name? It was Trump Jr. was on stage with like a senior campaign advisor. I can't remember where this was.
Not sure. Yeah.
Yeah. Anyways, they kind of had some whispers around it too.
Mm-hmm.
So it does not. And then there's like whispers that like you don't need legislation. I don't know if you've seen this, that like he can get it done through this Stabilization Act deal.
Oh, like through Treasury, like the Exchange Stabilization Fund. Yeah.
Yes. Yeah. That thing. So now people are like, they don't even need legislation. I don't know how to think about the likelihood of that. I do strongly believe, and I would put this at a 75% probability, that within the first 100 days, you get an executive order that says the United States is not going to sell any more seized Bitcoin.
I was going to ask about that. Like, how do you think the market would digest a diminished version of this, where it's just we're gonna wrap a circle around the Bitcoin we already own and not sell it? But we're not necessarily going to buy anymore either. It's just going to be kind of neutral. Do you think market would still react positively to that?
So it would depend on whether or not they killed the Lummis bill straight away when they announced the seizing. If they said we're not going to sell any more seized Bitcoin, and not to get down in the rabbit hole a little bit. So the U.S. government owns like 200,000 Bitcoin. But I can't remember, like 70,000 or something like that is from the Bitfinex hack. And then there's some stuff going on in that court case. There was just an announcement, I don't know, I lose track of time. Maybe that was like 6 weeks ago or something like that, where it's actually looking like, because of some nuances that I can't regurgitate about the legality around the seized Bitcoin, around specifically the Bitfinex hack, that it looks like maybe that's going back to Bitfinex, and that's not like part of the United States is, oh, we get to keep this forever and we used to sell it when we would do stuff like that. This is like, this gets returned back to the people that it was stolen from for some, minutia around legality reasons. I'm not 100% sure if that's the case or not. But all of that to say, if you have an executive order in the first 100 days, which I think you do, that says we're going to keep the Bitcoin that we have, that the U.S. government has, we're not going to sell anymore. If we get more, if we seize more, we're going to keep that too. And then it just like stays silent on the Bitcoin Strategic Reserve, the Lummis bill. I think that's probably flattish price action. Maybe if it says like, we're going to explore buying more, and we're going to, I don't know, do a study on it, or Trump says we're going to go through legislation. This is a legislative decision. This is, that the Lummis bill is going to decide what happens with this. We're not going to do it through executive order. That feels like kind of flattish price action. I don't think you get much of a pop just off of the United States isn't going to sell anymore. We're going to sell the seized Bitcoin anymore. I think that's kind of expected at this point. And I think the future selling of seized Bitcoin does not get discounted to today and then taken out of today's price. The market doesn't think about it like that, in my opinion. So the removal of that doesn't cause a pop because it wasn't pushing on price anyways. The way the market has digested these government sales is that they don't care until you see the government move a bunch of coin on chain, and then price drags ass for a few weeks or a few days or whatever, and then it's over until the next time you see coin move on chain. Government sees coin move on chain. So it's like the removal of that. I don't think you kind of get a price pop on that. But the one more thing I'll say on BSR is you had the state of Pennsylvania at the state level, pass a Bitcoin strategic reserve. You had state of Texas last week introduce a bill at the state level to establish a Bitcoin strategic reserve. The rumor mill is that there's 10 or 12 other states that are evaluating doing the same thing. I think people think Florida has quite a good chance. You would think that the state of Wyoming, with how supportive they are of Bitcoin, there's quite a good chance you get something like that. And I've been thinking through, is there the potential for like a slower burn on this thing? And maybe a path for the slower burn is you get 10 or 12 states that pass it at the state level and you try and build support kind of through that avenue that then flows up into the federal level. And then there's lots of politicking that's going on behind the scenes trying to get enough votes together to convince, Congress and then Senate that like this is a good thing for America. And that maybe it's like the timeline is sort of like, I don't know. So you can bet on this on Polymarket. I don't know how to think about the signal from the price on Polymarket for this, the efficacy or the accuracy of that signal, but I think it's trading like high 30s last time I looked at it. And so let's just take that. Let's say the market's saying there's a 35% chance that Bitcoin strategic reserve happens. Well, maybe there's this path where like over the next 6 to 9 months, maybe the 35% moves to like a 60% chance over the following 6 to 12 months from that period of time, right? And if you are getting these events and these headlines that are happening between now and then that are moving up the market's assigned probability for the BSR, that just strikes me as the kind of thing that like maybe that's not blowing the top off of price, but that feels very supportive for price because it's like, how are you going to do some kind of down 40+% kind of move if the market is continuing to being like shit? The market's sort of like, well, shit, maybe the United States government is going to buy 1 million Bitcoin. It's kind of hard to pull back, do a big pullback, I think, with that kind of setup. So that was long-winded. I don't know if you got any additional questions on that. It's important.
Yeah.
It's a very important topic for Bitcoin.
It is. No, I do have one more question on it, and it's more, setting aside the potential, price impact of it. Is I've seen two schools of thought on how it contrasts itself with the US dollar reserve currency complex. Does it help protect it, or does it help, encourage it, worsening in a way, right? So, okay, we're getting a strategic Bitcoin reserve. Does that mean we are concerned about the US dollar as a reserve currency, or does it help strengthen it? And how does it, help strengthen it? Obviously, like the ESF that we talked about earlier, that's a lot of just like protecting a currency where it's like, potentially you're even selling Bitcoin to buy dollars to, protect your currency. So I'm curious, like, how do you think about some of the more mechanical impacts of it? Because I personally, I haven't got that deep enough yet to figure out an opinion, but I'm curious, like maybe at least how you're thinking about that.
Yeah, that's a good question too. And I will not pretend to have like a completely full-formed answer on this, but I've thought about it some, talked to others about it some. One way to frame it would kind of be the following, and you would say, and maybe I'll frame it as a series of questions because curious if you have any thoughts on this. So the U.S. dollar has not been backed by gold since 1971, correct? Okay. The United States government owns how much gold do we have? Dollar amount?
Oh God, I don't know.
A trillion?
But,
$1 trillion
yeah.
worth?
A
Yeah.
lot.
So it's like $1 trillion against an M2 of 20
Hmm.
ish, right?
Yeah.
So I'll frame it as a question. Why does the US government hold any gold at all?
Yeah.
Why do you think that's the case?
Yeah. So this is where I'm at in my thinking as well. And it's okay, is it just an artifact left over from that? And it's just sort of like, oh, why would we sell it? Then the other side of the answer is we have it there as a just in case to be able to sell to buy dollars or to just, be able to use it as some point of reference to back it in some way if need be. So I guess those are the two routes. I don't know which is the correct route though.
Right. The way I would answer that is that there just appears to be a very clear game theory setup with other sovereigns, including our largest competitors, right? China and Russia. And the game theory, is basically like, well, you can't really sell all of it because if you sell all of it and then your competitors have all of it and you don't have any and the price goes up a lot, well, then you're in real trouble and US dollar hegemony is in real trouble. So the game theory is just we need to keep some around. Yeah, a trillion worth of gold versus 20 trillion of M2, you know, it's a pretty big gap, but everybody else has a lot, and some of our biggest competitors have been buying a lot, right?
Totally.
So it's just
Yeah.
like, oh, we need to hold on to this. So then, to me, if you just sub out the word gold and sub in the word Bitcoin, I feel like most of that still kind of holds, and the game theory still kind of holds, and I love I love monetary history as it relates to understanding the value proposition of Bitcoin. I think an understanding of value of monetary history is like extremely useful for understanding the value proposition of Bitcoin. And so when you like just think about the first principles perspectives of like why is gold a good store of value? Why did it replace salt and big heavy rocks and this sort of thing as stores of value? The six characteristics of money: durable, divisible, portable, uniform, and scarce and accepted. And to me, and I've thought this since I first got into crypto, and like, I mean, my views around this were formed in 2018. When you line Bitcoin up next to gold and look at it from a first principles perspective, Bitcoin is an attractive store of value. Uh, and so I think you can sort of take that and you can look at Bitcoin and you go, and there's already been so much chatter about other sovereigns buying a bunch of Bitcoin. I have no doubt that it's like the Middle East has however much the Middle East has. Russia's got however much they have through whatever pockets of wealth that, maybe it's not directly owned by the government, but it's like Putin owns it all. It's like Putin owns it all anyways. CCP and China, this acts the same way, however much they got. So you sit there and you think about all this and you go, well, our largest competitors probably already have some. They're probably buying more, and we should probably get some for the same reasons that we hold gold, and that there may be just this inevitability of wealth transfer from Bitcoin or from gold into Bitcoin over a kind of multi-decade period of time, just from a first principles perspective.
Yeah, I mean, I'm just kind of gaming this out live here with you, but perhaps there's two routes we can take here. It's either we buy Bitcoin to use as like a foreign exchange reserve, similar to like any other currency that we use to be able to sell to defend the dollar, or the gold would be in the other basket, which is this like just this game theory between different central banks to potentially protect against tail risk scenarios. And I feel like that's the more ideal outcome here than just something that we could sell, to defend a currency, right?
Mm-hmm. The one thing I'll say on that, I'm curious to hear your thoughts on this too. I really struggle to imagine the dollar collapsing. Like collapsing against what?
Yeah, well, that's why I'm like, it makes sense for emerging market central banks to do this, but that's why I'm
Yes.
I'm surprised that U.S. is the one to do it because it's the cleanest dirty shirt, right?
Right. Yeah, that's exactly right. Yeah, the best monetary policy house on a really shitty monetary policy block is the way that
Yeah,
I've
yeah,
talked
yeah,
about
yeah,
it. And these because I think you get a lot of Bitcoiners that frame Bitcoin against the collapse of the dollar. but it's like the yen is definitely going to collapse before the dollar collapses, and that's going to be in my view, that would be a strongly dollar strengthening event. The euro
Totally.
will almost certainly collapse before the dollar collapses, and that will be a very dollar strengthening event. I think the same is true for the pound as well too. When you just sort of look at what's going on in the British economy and the ails of the UK right now in general, and you're like, the pound is like definitely going to collapse before the US dollar, and that's a dollar strengthening event. So when I think about like Bitcoin versus a US dollar, well, we got to get through the collapse of all of those currencies first before you get to some kind of final boss scenario of like Bitcoin versus the dollar. And it's like, I mean, and that feels decades, like decades away. And, Bitcoin, even without a Bitcoin strategic reserve, in my view, by the time you got to that, Bitcoin would be trading 500,000, 750. I don't know what the number is. It's going to be trading, it's going to be a huge, huge asset by that point. And so I don't know, just this idea of imminent dollar collapse. I always just ask people kind of against what.
Exactly. Yeah, it's the dollar milkshake theory in action for sure. And yeah, it's hard to reconcile that against the US dollar collapse. I agree.
And one other thing I'll say against that, just a few years ago, the case for China and for yuan, that was a much more credible case. You actually could
Yeah.
look at that and look at the direction that China was going versus where we were going, the strength of their economy, the moves they were making, one belt, one road, this, that, and the other. In my view, you fast forward to today, and
It's a
that
mess now.
China looks, it's a much less credible type of competitive setup there. Yeah.
Yeah, I know. I mean, you just look at I was looking at a chart of bond yields in China this week, and it's just like cratering. It feels like they're in their 2008 moment. So I don't think it's nearly the risk that they were a few years ago for sure. Okay, so for the last bit of our conversation here, I want to talk a little bit more about the more in the weeds parts of crypto and how you're thinking about them. So I'm curious about how you think about this, but my opinion has been that you always hear people say, okay, we have crypto, but we haven't found a use case. My opinion is that we have found use cases. We've just been hampered by regulatory constraints at every turn that have stopped us from having the ability to actually use those use cases. So we're stuck with these useless governance coins and things like that. So I'm curious, with respect to what we talked about at the start of the show in terms of just this deregulation and more just at least clear regulation, right? How are you thinking about the rest of the crypto space?
So what you just described, in my view, will be the primary backdrop for alts in 2025. That thing that you just said, that's the best portrayal of what the alt market I think is going to look like for over the next year, which is basically like the way I think it's going to work is in the first 100 days, you will very rapidly get a series of settlements and no action letters out of the SEC and the CFTC. You will get, along with a series of executive orders out of the White House that create a de facto regulatory framework for crypto. And then you should have legislation that follows that, that I would guess will generally mirror what gets put in place in this kind of de facto piecemeal settlement, no action letter executive orders. And I don't know where I would handicap what's the over under on the timing of the legislation getting passed. I don't have a strong view on that. My view is kind of that it's not going to matter all that much because you will get rules of the road so quickly into the Trump administration through those other avenues. And then this will be sort of like a dawn of a new day for alts. And it's like a new hand of cards basically to be played. And then do you just start seeing a series of token structure changes by alts, new tokens being launched that have security-like features that in turn give the market more compelling value accrual mechanisms. Yield, take a very easy way to think about this is you just think of the yield that's generated from a protocol, the fees generated from a protocol, and you give that back in the form of a yield or in the form of a buyback and burn type of thing. or other more inventive equity-like features sort of deal. And I think, to me, I think that's going to be the main backdrop for the next year for alts. And then the question is, does that translate into finding core utility for numerous alts? That part I am less sure about. I am not strongly of the view that a lack of regulatory clarity has been this extremely strong gate that has prevented alts from finding core utility. And I'll even go a step further. We'll call it core external utility, where you are solving real world problems. You're providing solutions for real world problems using crypto that leads to significant, mass adoption at a scale that is meaningful in the real world, not tens of thousands of users or 50,000 users that people in crypto get excited about when some random dApp has like, oh, we got 50,000 daily active users for like 1 week or something like that, right? Like tens of millions of users, right? And we haven't really found that outside of Bitcoin and stablecoins. Bitcoin has found product market fit. Stablecoins have found product market fit. And everything else in the alt landscape is somewhere in between a solution looking for a problem and vaporware grift. That's been the two goalposts for the very large majority of alts. And then what you also find product market fit around is like internal use cases, right? Like it's like, oh, I created pump.fun, and pump.fun has generated over $1 billion of revenue. It's like the fastest $1 billion of revenue, maybe of like any company in the history of the world or some shit like that. I don't know, right? But it's like, oh, yeah, but this is like, this is an internal use case, right? Oh, DEXs have found product market fit. Congratulations, right? Now we have 19,000 DEXs for people. And some people feel different ways about this, about speculation. Like, oh, speculation, this is the use case for crypto. And like, okay.
It feels defeatist.
Yes.
Yeah.
That does not get me, that's not what I came to this for. It does not get me excited. I think it has a significant nihilistic bend to it. We talked about that earlier. So this idea that you're like, oh, you've created the greatest casino ever. I'm just really not compelled or excited. It's not really what I want to do with my life, honestly. Like, it's just not. I'm not a gambler outside of crypto, never really have been. And so that's my feelings on that. I think I would maybe going back to the beginning of this conversation, I'm hopeful.
Yeah.
I am hopeful that getting a really supportive and helpful regulatory framework that over a multi-year basis, that we will be able to look back on this and it will be a turning point. I think what it also does is I think it does open up the door for Web 2 companies, traditional technology companies, and like traditional gaming companies to get involved in crypto in a meaningful way. And maybe a good example is like, well, now GTA 6 is going to have crypto like in it, when previously they would like not be willing to have crypto in GTA 6. I don't know if that's going to happen or not, but it's just like that's like a good example, something like that, right? Where you have really big traditional companies that now, because the last cycle you heard rumors about this stuff. You always at the peak of, it's like you were like, oh, this so-and-so huge company is like really looking at crypto, so-and-so huge company. Some of that stuff came to fruition, but I do think you can get more of that. Yeah, I think you can get more of that. Maybe like real world asset. That's like another sector that people are fired up about. But to me, it's not that compelling, because to me, what you're really doing is just like replacing a database technology. You're just like, oh, we used to use this like closed sourced database to like do Wall Street's back office, and now we're going to use this like real-time instant settlement database technology. It's called a blockchain, and so we're like upgrading like Wall Street back office, which is probably going to happen. And the likelihood that that does happen is certainly, I think, increased very significantly in a Trump administration. But it doesn't get me like super. I don't know. I'm not. It's like a little boring to me or whatever.
Yeah.
So
A funny distinction I think about too is, what could be positive for the fundamentals could actually be bad for price, because like, okay, if we take like Aave or something and it's like, all right, if we start to value this with like a DCF, you're like, oh shit, like this price to revenue multiple is absolutely insane. Like you start to anchor it from a DCF and suddenly it's like, oh shit, this is way overvalued.
strongly agree with that. Yeah, strongly agree with that. And maybe there is a path where what you just described causes some structural decrease in market cap against BTC, right? Where you just go, oh, these are now based on fees. This is a PE. These are all super overvalued on a PE basis. And so we just got to right size all the market cap that's stuck in this. Where does that market cap flow? Could flow to BTC. And then I think maybe where the question mark is where do L1s fit in that? And the L1 market cap relative to, because L1s also generate fees, but sort of the big pitch for L1s is that you want them to be low fee, right? That's what we're all working on now, is like you need these things to be cheap. And so you actually don't want them to have a lot of fees. And so there is a sort of question mark there around what would happen to the aggregate market caps of L1s in that whole. Now we have this clear ability to return fees generated back to token holders because of regulatory changes. But I think you do bring up a great point. Yeah.
Well, look, Travis, it was a ton of fun to get you on the show finally. It's sweet to just game things out live here and try to figure it out as we go. Where can folks go if they want to hear more about you?
Twitter is always great. Travis_Kling. I write a monthly update letter. It goes out the first of every month. I've been doing that for over 6 years now. People like it. It's pretty meaty. And if you go to my Twitter profile, it links to the fund, and you can sign up through there. So yeah, enjoyed the conversation. Thanks for having me.
Awesome. Yeah, thanks, Travis. Looking for a blockchain that combines high performance with zero headaches? Scale is your answer. With its advanced parallel processing and modular sharding, Scale delivers gas-free transactions and limitless scalability, perfect for gaming, AI, and consumer-facing dApps. Already a top 10 blockchain on dApp radar, Scale is powering next-gen use cases with over 750 million transactions and counting. Discover the future of Web3 at skale.space/ecosystem and stay up to date with their journey on X at Scale Network.